Alrighty, hope everyone had a great weekend. This is going to be the weekly outlook for February the 24th to the 28th. So, really coming to this week, we kind of had the markets end up dropping a decent amount on Friday, kind of back inside this range. So, we'll see how the market opens up, at least the futures coming in the next couple hours and then tomorrow morning once the pre-market opens as well. But really key economic events coming into this week, what we do have is consumer confidence. This is going to be Tuesday at 10 a.m. And then Wednesday, we have some red folder news. Sorry, we don't have any red folder news, but we have some G20 meetings. This is going to be later in the day. And then, of course, on Thursday, what we do have is unemployment. That's going to be at 8:30. And then Friday as well, we have core PC at 8:30. And then we also have the Chicago PMI. This one's going to be at 9:45. So really coming to this week, we don't have too many red folder news events. We just have consumer confidence, unemployment, and then you just also have the PMI that's going to come out on Friday plus the PC. So really coming to this week as well, what we also have to keep in mind is we do still have some earnings left. What I do see is the major one, which is going to be Nvidia. This one's going to be after close on Wednesday. So I'm curious to see what that does. Those are the main ones I'll be looking out for. Besides that, we also kind of just have like Home Depot, other smaller ones as well. But the main one is going to be Nvidia. That's the one that we're going to keep an eye out on. So let's go on to some of the charts that we have. ES thesis for this coming week. So this is on the ES chart, this is on the daily time frame. ES failed to close above the top of the range. As you can see, we end up not being able to get above the key 6148 level. That caused the markets to reverse back inside the range. You can see that we're still, you can see that we are having a steep rejection off of that level. What I expect to happen now is a gap on Monday. We'll now have to go onto the lower time frames and take this day by day. So coming into this week, if we go into the ES chart, as you can see right here, we're just rejecting off of the ranges. So as you can see, what I wanted to see happen was the break outside of this range, which was your 6162 on the higher time frames. And now we're just unable to break above this key high. So we're unable to break above this key high. You can see we're building up these higher lows on the overall market. But now price on Friday end up breaking this higher low, rejecting off the top of the range, and now we're coming back inside the middle of the range. So you can see if we did want to have any sort of trend in the markets to potentially continue towards the upside, that is off the tables now. We rejected off the top of the range, and now we're just coming back inside the range here on the so on the 1 hour time frame. As you can see, these higher lows were being built. You wanted to see the markets really just continue towards upside. We failed to get back above this 6148. And once we got underneath, this is essentially where we broke structure towards the downside, right? Change of character. And now you can see we're gravitating towards the low of the range, which is our 6140. So if we go back onto the daily chart here, we're basically back inside the middle of the range ever since this December 18th drop. This was FOMC back in December. Now we're clearly inside of this range here on the ES on the daily time frame. So what we can expect is just similar to what we're doing moving forward, is just take it day by day, at least on the ES, since we're now for sure back inside the range. And I don't expect now, right, to break the range anytime soon because now we're inside the middle of the range. So we're going to take it day by day. We're going to look at really the past few prices. We're going to look at the past few sessions price actions and just take it day by day and determine what we're going to trade. We're not going to have a bias coming into market open, and we're just going to let the trades play out. So thesis for the SPY. Rejection on the weekly time frame off the all-time highs level. Now we're moving back inside the range along with the ES and other major indices. What I would like, this is what I would like. This really shows that we're not going to break outside the range anytime soon. Within 1 day, we're back inside the area that we're at a few months back. So as you can see here, similar thesis to the SPY, higher time frames. We can get rid of this. We're unable to close above this all-time highs level, which was really key for the overall markets. So as you can see here, if we go into the weekly time frame, we end up failing to close above this all-time highs level. So you can see right here, this is basically our all-time highs general area. You can see a lot of wicks right here, failed to close above this key high, and now we're just coming back inside the range, right? We're still building up these higher lows. So on the weekly time frame, we are still bullish, but based off of the rejection off that all-time highs, right? What we like to see coming to this week now is to see if we can hold this 599. This is the level I'd like to see hold on the general market if we're going to have any sort of kind of bounce back towards the upside. Every single Friday or every single down day that we've had, majority of the times that whenever we had this big move towards the downside or a gap down on the overall weekend, right, we just instantly got bought back up and we just continue back towards the upside. So really coming into this week, I want to see if we can end up holding this key area, which is 600. If we do break underneath this 600, that's just going to indicate that we're just going to continue more towards the downside to potentially this 590 general area. So we'll see if we have any sort of reaction around this level. See if we can kind of have this V-shaped recovery. If we get underneath the 600, we're just going to continue back towards the downside, break underneath this key pivot low, and potentially use this as now resistance for this continued push back towards the downside, towards your 590 and below on the SPY. Now let's go on to the NQ chart. Thesis for this coming week, NQ similar to the ES, unable to break outside the range on this name. We hit all-time highs last week on the QQQ, and now we're rejecting off this level. What I like to see on this name moving forward is a reaction that we have off of your 21,510 level on this name. That is most likely where we're going to get its first reaction on this name. So as you can see right here on the NQ, the higher time frames, the key level that I have marked out in this case, at least coming to last week, was the key level being that 22,111, and then also had a couple key levels, and then I had this all-time highs level marked out. You can see a little bit of rejections off this 22,243, and then as soon as we got back underneath, this is the exact level we'd like to see hold. You can see weak candle closure. We got back underneath this previous resistance, trying to use this as support, was unable to hold this level, and now we're continuing back towards the downside. So now for the QQQ, sorry, this is the NQ chart. You can see previous resistance. You wanted to see this level turn into support. We're unable to. Once we broke back underneath, you can see this ended up using this as basically, once it broke, right, we just continue towards the downside. Now the key level for the NQ is going to be this 21,510, which is also your previous all-time high. So really, this is a general area that we'd like to see hold, right? Kind of the higher low being built off this key area. So let's see if we do have any sort of reaction around this 21,510. You can see this is kind of the low of the range. This is the middle of the range. So if we do want to see any sort of reaction on the NQ, we like to see it kind of base above this 21,510 for this next leg towards the upside on the overall market. If we look at the QQQ, you can see similar to the SPY, was unable to have a strong candle closure above this previous all-time highs level, which was expected, right? You kind of had a nice reaction. Price ended up breaking above, nice retest, continue towards the highs. Where are we going to get the reaction? The reaction is going to be at this all-time highs level, which we ended up hitting last week. We're still intact, as you can see. So I do expect, I'm still bullish until we can honestly break structure, which is going to be this key pivot low right here at this 522 level. I'm still very much intact for price to push back towards upside. If we break underneath, then it's going to have that change of character where we could potentially head lower. But as long as you maintain your 522 and your 525, I do expect the Qs to push back towards upside. So coming to next week, key level, I'm going to have marked out your 524. That's going to be the key higher low spot for the market if we do want to have any sort of balance in the overall markets. So that's going to be key coming to this week. We can go on to Tesla. Tesla thesis coming to this week. Right now, you can see that Tesla is rejecting off 360 level on the higher time frames. That is the earnings low now being used as a retest towards the downside. What I like to see moving forward is a reaction off the 330. That is the level that I'd like to see hold for a short-term low. If we break underneath that level, the next level towards the downside will be 300 and below. So coming into this week on Tesla, you can see we had a little bit of reaction here around this 360, which is also your earnings low. We were unable to get back above this key level, right? You can see earnings low right here, previous support. And this area was just being used as resistance. You can see it was unable to get above this key area. And now we're just continuing back towards the downside on the overall markets. And once we broke underneath this key pivot low as well, which is your 247, we're starting to gravitate down towards the low of the range, which is all the way going to be at this 330. So coming in onto Monday, I will want to see the reaction that we have off of this 330 on the higher time frame. That's the low of the range. That's where Tesla is so far on the daily time frame. Once we really got back underneath this 414, we started to have a mini downtrend on this ticker. Now you can see this pop is being shorted. The next general area that we're going to have the reaction is back down towards this 330. So coming in onto Monday, what I like to see is either, if we're not already gapped down on Monday, I'll really want to see the reaction on Tesla around this 330 to see if buyers kind of step in off this 330 on the higher time frame. So we'll mark out your previous day lows and we will take it from there. Next chart we have is Nvidia. This one does have earnings coming into this week. Right now, you can see that Nvidia is rejecting off the daily gap on the higher time frames. This is the key level that I talked about coming to last week. You can see all the wicks off of that level. And now what I'd like to see is Nvidia move back down towards the 130 level on the higher time frame. So as you can see right here on Nvidia, what we do have is we have earnings coming into next week. Earnings is Wednesday after close. Price, as you can see, nice previous support, right? Turn into resistance, turn back into support, right? Nice push back up in towards this daily gap, which was this 142. And you can see rejecting off this daily gap, was unable to close back above this key area. This is the level that I kind of defended all week. And this was really the key area that we want to see price get above if we want to see any sort of continuation on this ticker. So we're unable to get above that 242. And I can see as well, right? Your 138. Once we broke back underneath your 138 now, finally had a weak candle closure, price gravitated back towards the lows, which is your 135. So coming to this week, we do have earnings on Wednesday. But the next really key levels after this 134 is all the way back down to 130. So most likely it probably won't move too much coming to this week pre-earnings. But the key levels that we're going to keep an eye out for is going to be this 134. And then if we break underneath this 134, we could potentially see a move back down towards that 130 and below here on Nvidia. As for Meta, this one, nice push towards the downside right now. You can see that Meta got underneath the earnings high. The next level after the earnings high is the earnings low. Meta's key level is your 683. What I like to see is the reaction off this level coming into this week. So as you can see right here on Meta, if I go on to the 1 hour time frame, price got underneath this earnings high. So this was used as support. As you can see right here, previous resistance turning into support, got underneath this key level, and now end up using this as resistance for this continued push back towards the downside towards your 683. As you can see right here, now if we get underneath your 683, we could potentially see a little bit of a bigger reaction and a push towards the downside. I would like to see a small bounce coming into market open on Monday as well. Let's see if we can defend this 683 level here on Meta. The next chart that I do have is Apple. Thesis coming to this week, Apple ended up moving back towards my main objective for the last week being that earnings high. You can see we had a nice reaction off that level. Very nice move towards the highs with the overall markets dropping. What I would like now is to see Apple if we can get above that earnings high. So for Apple, as you can see, really my key objective was that earnings high, right? The earnings high was key because, right, that's a main objective that we have, right? As you can see right here, this 248. Once we got underneath the earnings low, we had some nice strength, push back towards the upside. The next logical objective was going to be this earnings high back at this 248. So that was the key level that I was looking for to kind of gravitate all week. It took a while, but finally met its objective on Friday. And you can see once we got up and towards that key level, that's where most people are looking to sell right at this earnings high, which was your 248. And then now you can see we're having this nice reaction off that key area. So really now you can see a lot of built up liquidity towards the downside here on Apple. I wouldn't be surprised if we don't hold this 245. We can see a little bit of a bigger retracement coming to Apple this week. And we can probably push all the way back down towards this 240 on Apple. So we'll keep an eye on Apple. This one most likely will have a mini pullback this week after having a little bit of rejection if it does not hold this 245 on Apple. For Amazon, this one thesis coming into this week, Amazon ended up staying heavy compared to the overall markets. You can see we end up moving towards the earnings low now that we're underneath the 220 key area and gravitating down towards 216. What I like to see is this level hold on Amazon. The next level, if this daily gap doesn't hold, is all the way down towards 210 and below. So as you can see right here on Amazon, the key level that we do have marked out is this daily gap, which is also your previous resistance turned into support, as you can see right here. For Amazon, this one, once we got underneath this earnings low, that was key. You can see we end up having a nice reaction here on Thursday. We just came right back down up towards that retest level, end up having a nice reaction, and then just continued right towards the next key areas, which was 220 and below, which was your 216. So now on Amazon, you can see we're having a little bit of a bigger pullback here coming into this previous high, which is also this daily gap. I would like to see kind of buyer step in off this level to have this next push back towards the upside. What I like to see is this mini V shape. If we fail to break back above 220 and it stays heavy, and we get back underneath this 216, right, price is going to push back towards the downside towards your like 210 and below. So for Amazon, I like to see the reaction off of 218, your 216, and for a mini bounce back up towards 220 at the very start of the week. For some other tickers that we have, Microsoft kind of staying heavy with the overall market here. It hasn't really done too much for really overall the kind of half of the year on Amazon. Sorry, on Microsoft, we haven't really done too much. Google, now after earnings, right, big push towards the downside. Now we have this earnings gap. So for Google, as you can see right here, we're actually inside this gap right here on Google. This is the key area that we'll mark out. Most likely what we'll be looking for is potentially this gap fill coming into this week on Google, right? Pretty weak candle closure. I would like to see this gap fill reversal. So I'd like to see this push all the way back down towards this 177 coming into this week. As long as we maintain underneath your 183, I like to see all pops being shorted towards the downside. And I like to see Google continue down towards your 178 on this name. As for AMD, this one, just staying heavy with the overall market. We're unable to get, you can see this mini gap here, unable to close back above really your 114.16. And now we're just continuing back towards the downside. This one key level that we're going to have marked out is going to be your 110. If there's no sort of reaction around your 110 and it stays heavy, you could be looking for the break back underneath your 110 for this continued push back down towards your 105 on this name. So coming into this week, I should have the pre-market preps back up and running. I think my internet's doing a lot better here and the weather's nicer. So we'll talk about some names more coming into market open on Monday, and I'll see you guys tomorrow morning for the pre-market prep. All right, take care, everyone.